As we speak, 17,100 is being tested. How are you approaching it now?
Okay, Anuj, so three things. Last we discussed 16,300 to 17,150 was the foreseeable range. We have come close to the upper end of that range, and if I can lean on charts and show you the analysis, see, momentum on this 15-minute chart is continuously declining. So this has become a zone of suspicion. Bank Nifty is even looking even more risky for the very short term couple of days trader. But say over the next 2 days, if we slip back to something like 16,850 maybe, that's going to be a place again to look for buying. And if that also breaks, 16,700 is the next support. So the second thing I wanted to say, at these levels, the index has a complicated relationship with a large number of large cap stocks. You know, at lower levels at 10,000, 12,000, 14,000, that complicated relationship with, say, Reliance or an HDFC Bank. But now at these levels, there are more than 10 or 12 stocks which, you know, if moved by 4 or 5%, can negate a sell-off in 20 other stocks. So index trading is going to be far more trickier. The bottom line for us is there's a very long list of stocks that have still got at these levels also very good entry points for, you know, positive reward risk ratios. So we continue to focus a lot more on trading on stocks on a 10 days to 10 weeks horizon.
Okay, all right. Sushil, noted your point in terms of the Nifty, but I just wanted to pull up the Indian rupee chart. Just pull up that. I think it's almost breached at 73 odd mark. Just pull it up. Yeah, it's moving towards that 73 odd mark, and the IT index continues to struggle today. So, Sushil, I wanted to ask you about the currency space. Your view on the dollar index. We went to around 93.5 odd, and then we saw a bit of a correction. Where is that headed? And also, what about the IT index? Being the big outperformer for August, is the good run ending?
Okay, 4 questions you've asked. Let me attack them part by part. Let's focus first on this. Let me show you this USD INR chart on a 15-minute time frame. I think, it's oversold. Momentum is divergent. Anytime, the rupee can leap back to about 74 over the next couple of days. That might coincide with some correction on Nifty. That's one thing. But beyond this, on, say, a longer horizon, right now, to try and take any bold call that the dollar rupee will go to 76. I think 74 is one place where it may come back to again retrace where we are. Dollar index on a medium term horizon of, say, about 2 months has made a top. But the last 5 days of continuous slide down on the dollar index, again on a very short term, over the next 2-3 days, a leap up to retest the recent hike cannot be ruled out. That's the likelier scenario. And now coming to the IT index stocks, not necessarily, the one should never correlate the very short-term movements in currency and the performance of IT stocks, because no single IT stock, IT company CFO gets his salary or bonus for wagering on the currency, but only for hedging it. So the hedge decisions are already taken long in advance. And at most, if there is a sustained trend in the currency, then the pricing power or the contracting power or the top line growth, may get affected. So currency and IT stocks should be correlated for an investment decision. If, say, 1 year outlook is rupee is going to be very weak, over the next 10 days, if you're going to try and correlate both, you will get killed on perhaps both. So IT stocks, independent of the rupee dollar view for short-term trading, I think all the large cap IT names, starting from Infosys, which has been closing lower for the last 5 days, Wipro, TCS, Tech Mahindra, and even HCL Tech, they're kind of giving a sign of fatigue here. So given the kind of strength of this market, I don't want to adventure into trying and shorting anything, and hence not even IT. But it's a good place for one to take profits on IT stocks, and then we'll reevaluate whether there is a re-entry or if they fail to make a further higher high after a 5% dip, then we will think of shorting them. But right now, just take profits in the long and get out of it.
Sushil, afternoon. I see a couple of metal names as well where you're looking at going long. Nalco, Hindalco. Is it underlying aluminum prices in focus for you?
Aluminum prices is the added dessert. It's a huge run in copper that I'm again looking at, and even you can add Hindustan Copper. So that's a justification for the intelligent mind. Intelligence also needs to be fed with something. But my decision making or recommendations are purely based on the independent chart of these stocks. For that matter, even a Vedanta has exposure to these. But Vedanta is always doing its own spiritual separate thing. So Vedanta, there is no buy for us because it's a much more complex chart. But yes, Hindalco, Nalco, and Hind Copper for us are buys right now.
Okay. You know what, Sushil? Very interesting couple of stocks that have really underperformed, and you expect them to catch up now. I mean, the stocks that I'm talking about: Tata Motors and RBL Bank.
Tata Motors, we have a clear-cut buy recommendation on. And, instead of trying to trade a stock like Tata Motors, which for day-to-day trading can end up getting noisy, if one will control the position size and be humble with the exposure, I'm not going to be surprised that, Tata Motors give you a 30% upside from here, irrespective of whether Nifty goes to 18,000 or not. Tata Motors over the next 2 to 3 months, a 30% upside is feasible. So some trailing stock each person will have to keep. And the other stock you asked, Anuj, was?
RBL Bank.
Sorry?
RBL Bank.
Yeah. RBL has been like badgered too hard. So Anuj, along with RBL, I would say there are 4 or 5 of these banks. The larger banks are again having a complex relationship with Bank Nifty, but RBL, Bandhan, City Union Bank, even a Canara Bank, Punjab National Bank, Bank of Baroda, they're all buys for us.
Okay.
Bandhan and RBL could produce a outperformance, a superlative performance of even a 25%, 30% move kind of thing. And the rest of the names maybe about 20%. So these are the banks we are long on, irrespective of how complex a pattern I see on Bank Nifty.
All right, Sushil, you mentioned that RBL Bank and some of these banks have got a bit of a box in the face, but the one that's really got hit hard has been Oro Pharma. Has that stock, bottomed out? Do you believe that it's good, is looking good on the charts from here on?
Nigel, see, what has been happening is the beautiful thing in this market is that, while index keeps on climbing and people are getting despondent, ki paisa nahi ban raha hai, there's continuous sector and stock rotation going on. So the superlative performance in large cap pharma that happened in the prior quarter, and then we have had a deep correction. So Aurobindo, Dr. Reddy's, Cipla, Lupin, even a Glenmark, they're all ready to fire up now for us. They're all buys.
Sushil, what about this construction and real estate? You got a couple of names: NBCC, NCC, shipping. Yeah. GE Shipping doesn't get talked about very much. Has been making a bit of a move last few days. Go on.
So GE Shipping and Shipping Corporation of India both look good buys for us. Of course, these are less liquid or less participated names. So you can't have that 5 rupee stop loss strategy on these names. More like an investment call, do it in a humble size. I think 30 to 40% upside, about 25-30% on GE Shipping and 40% on Shipping Corporation of India looks good. And regarding, the construction names, see, again, the flavor is returning back to a number of property names, not all of them, and construction names. So NBCC, NCC are buys for us. EPL, LG Equipments, okay, those are engineering names. Say Godrej Properties, Bombay Dyeing, these two are the property names that I have comfort in recommending a buyer.
Okay, am I reading your target on Indiabulls right, Sushil? If you could explain that call and also LIC Housing. Both have been big underperformers compared to, say, Canpin Homes.
See, Anuj, you would have noticed in the last 3-4 months the kind of stocks we recommend to come and buy, and some colorful people will kind of rant that we are only chasing underperformers. In a market where there has been a strong evidence for continued stock rotations and sector rotations. You sell strength and you buy weakness. That's how your risk stays under control. So within the NBFC space, LIC Housing Finance, L&T-FH, and Indiabulls Housing Finance are our selections for now. And one more stock you asked, Anuj?
LIC Housing and Indiabulls Housing, both.
Sorry, I missed your voice.
Yeah, you have given your take on both the stocks, Sushil, on Indiabulls Housing Finance as well as LIC.
And I want to jump quickly in. There's I think across the board buying on 4 or 5 cement names.
Yes.
Though all of them are looking good, but say Birla Corp, Shree Cement, Ramco, Dalmia Bharat, India Cements. These are the 5 picks we have in cement sector. So even if index comes down by 300 points, that's a separate game. 25% agar various stocks mein ban raha hai. So it's better off to focus on those. And very quickly, Anuj, say, if you were to ask me what's a 50% return from here also, or 100% also, I think BHEL buying at this price, I won't be shocked and surprised if by Diwali we get an 80% return on this.
BHEL and I think BML, if I'm not mistaken, both those two stocks, you've been quite positive on.
BML say 50% up and BHEL becomes a doubler, or say your Amra Raja batteries or a Excite goes into, kind of becoming. again doubles. So I will not be surprised. So there's enough money to be made on stocks here. Stop worrying about the index.
Okay.